All right.
Oh,
Hello, everybody. My name is Jeff Gibby. I've got Steve Primo with me. I want to welcome everybody out to the Ticker Talk with the Traders Forum. I really appreciate your being here. And I'm going to go ahead and read a legal disclaimer just to kind of make sure that we're covering all of our bases. Welcome to the stream. If you have questions as we go, please feel free to ask. I really like these sessions. We just really kind of talk a little bit about trading and kind of I love the format, so hopefully you like it as well. Let's go ahead and get underway. Let me see. Here's a picture of Steve Primo. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell any securities, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. Metastock, the Traders Forum LLC, and their employees disclaim all liability for any investment decisions by investors based on the use of the software, any trading strategies, or any information provided in connection with these companies. Metastock, the Traders Forum LLC, and their employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So that should get everything in terms of the legals out of the way. If you're just watching this on YouTube, like and subscribe. It helps a great deal. We appreciate that. You have no idea how much it helps. And I've heard, I have nothing to actually verify this, but I've heard you get good karma from it. If you haven't before, you should join the tradersforum.com. The tradersforum.com is kind of a new adventure that we've been doing, and it's free. You can join. We have a lot of really good traders that are up there that are talking about the markets. There's a lot of pretty good lessons that are up there, and just come be part of our community. We'd love to have you. So my slides are not reloading, so we'll just go to this picture of the cues, and I'll talk a little bit about my guest, Steve, today. Steve, it's really good to have you. I'm trying to remember, we've been partners for so long. I'm trying to remember exactly kind of when it started.
yeah,
But
I don't remember either.
yeah. It's been, I remember like we worked on a lot of stuff before I moved to California, and then I moved back to Utah, but that would have put it at least 15 years ago.
Right, exactly.
So just to talk a little bit about Steve and kind of introduce him, Steve's been actively trading the stock market and the markets for 47 years. He started on the Pacific Stock Exchange, which one of those locations is now a gym. We looked it up. And the other one's
Wow.
a restaurant, I believe. He likes to talk a lot about some of the strategies that he's got. He's one of what I would consider one of our best trainers because he's very down to earth. He's very clear in the explanations that he does, and we just love having him on. That's kind of, I think, how I'm going to. Steve does a lot of articles for stocks and commodities. He contributes to sites like FX Street, at Forex Pros. He made markets in over 50 stocks I see right here. So I think that's how I'm going to introduce you, Steve. Aside from, I'll just kind of talk a little bit personally. I've known Steve for about 20 years. I love having him on to do all the events that we do because very, very personable, very easy to understand, very, very down to earth kind of presenter. And I think that's really, really important. So there you go. There's your introduction, Steve. I promise I'm done.
Oh, thank you. Thank you very much,
With
Jeff.
that said,
Very
is
kind
there
intro.
anything that you'd like to add to kind of like your history?
Well, I often say this when I've been interviewed before or when I'm doing live seminars. So many people that are new to trading or haven't been doing it that long, they think that you have to come in with the skill set, or you have to go to school and take business courses, or have a business major of some kind, or have to have a humongous account, where you have this tremendous amount of money so that you can carry large loads of risk, and you have to have a ton of knowledge about the markets and how they work. And I'm here to tell you that you don't need any of that at all. You really don't. Most of the traders I knew, myself included, didn't have any idea what a stock was when we first started. Had no idea what a bid and ask meant. Didn't know what a moving average was from a 52-week high. We just didn't understand the whole entire concept. but a lot of us turned into be some really, consistent traders. Some of the best traders I knew were lifeguards, cab drivers, bartenders, because they had that instinct in how to be in sync with the market. And so, I'm not saying that, well, that's great, so I don't need to know anything, I can just start trading tomorrow. No, you need sound fundamental education, but that's really what you need. You don't need to have, all the most top of the line equipment. I mean, to me, that's a waste of money. I'm looking at one screen right now, and that's all I have. You don't need to have 10 monitors in front of you, or the most, largest account, or the most expensive software. You really don't. It's just really the basics. It's been my experience that it's the simple things that work, not the most complicated things. And so, and I'm saying this from firsthand experience, because when I first started trading 47 years ago, I thought the same way everyone else did. I was one of the first traders actually to leave the trading floor and to trade on my own. And I'm happy to say that my very first software program was Metastock. I mean, this was back in the mid 1990s. I purchased Metastock, and to tell you how long ago that was, I think I got my data through the airwaves. I had to use a radio through my window.
Oh yeah. I remember those. Like that was it the old DBC connection where it was like it would be broadcast through CNBC, and it would work every time except for when there's commercials. Is that the connection you had?
No, this was something that was just, I had a kind of like a wire or a tube that went out my window, and that's where I got the data from, the signals from, I guess, a satellite or whatever. And whenever it rained, I couldn't get any, or cloudy. So that's how antiquated it was back then. But that's how long I've been trading. I was one of the first people to leave the floor and do it on my own. So anyway, it's just, I didn't know anything when I first started. And even though I had tons of, so-called information on the floor and stuff, there were traders that still lost tons of money, even having all this information. So it really isn't about that. It's more about being able to be consistent and using a sound fundamental method that meets your needs. And so that's really what we teach at Specialist Trading.
Can I ask you, Steve, how you got started in trading? Like, was it initially something that you decided you wanted to do? Did you kind of stumble into it? How did you kind of get started with the Pacific Stock Exchange?
Totally stumbled into it. Like I said, I didn't have any idea what a stock was. I had just graduated college, and I needed a summer job. And through luck would have it, I visited the floor downtown just off a whim. I was walking by the stock exchange downtown Los Angeles, and I went upstairs, and there was a gallery there. And I looked down, and I saw these hundreds of people. It's very similar to the New York Stock Exchange, but probably about I would say maybe a half of the size of the New York Stock Exchange, but still the size of a couple of large football fields. And there was paper all over the floor, people running and screaming, making these weird hand signals. And I was hooked. I had no idea what they're doing, but I was hooked. And I thought, gosh, this would be fun. This would be a fun summer job. I could work here and then do what I want to do, during the afternoons, because, they said the stock market closes around 1 in the afternoon. So I went and applied for a summer job, and I was immediately hired. And I had no idea what to do, what the stock market was, but it looked exciting. And my first job was as a runner on the floor, because in those days, once again, there was no high-speed computers, there's no electronic trading. Everything had to be reported from what the trade that had just taken place, to a reporter. He would write it down in a little notepad and then take it up. So in other words, if a transaction of 100 shares of IBM had been reported at, say, 105.5, the specialist would yell out, "Reporter, 100 shares IBM, 5.5." And so you had just to write that down and then put it in a little pile, and then someone would collect it every couple of minutes and give it to the teletype operator. That's how things were done back then in the 70s. And I remember when the market would be up 100 points, that was just unbelievable, or down 100, just never seen anything like that. Even actually 30 or 40 points was phenomenal move. It was all relative. So I did that for roughly about 5 or 6 months. It was exciting being in front of all the specialist posts, seeing trades in IBM, General Motors, and all these stocks take off and whatever. And then I was hired by a floor broker. This was Pershing and Company to be their floor broker assistant. So that took my level up a notch. I no longer had to stand in front of the specialist booth. I got to actually take trades to these specialists. So I was an assistant floor broker, and I actually did that. I would enter trades. Someone would call up your brokerage house, let's say Shearson, Hayden, Stone, and you'd buy, once again, 100 shares of IBM. I would take the order over the phone, walk up to the specialist and say, I have 100 shares of IBM to buy. What's the market? He would give me a price, and I'd take the price and go back and report it over the phone back to the client, the broker. So I did that for a couple of years, and then I was ultimately hired by a specialist who made markets in roughly about 50, 60 stocks to be the specialist assistant. And this is where you were really at the top of the game. This is where you actually were able to make markets that mirrored what was happening in New York or even better. So I made markets in IBM. I became the IBM assistant specialist and waste management and other markets like that. And I did that for another couple of years. And then ultimately, I was hired to become my own my own specialist, I should say, where I had to hire my own assistants. And so I did that for 9 years through the crash of '87 in the bull market. But once again, I had no idea what a stock was. I didn't know what the whole game was. I had no money. I didn't have any education background. I stumbled onto it, but it changed my life forever.
That's cool. Do you remember the first stock you actually bought?
Oh, wow. It was actually an option because I didn't have enough money to buy the stock. And at the big time, there were options. So what I really did was I started, there was this brand new thing called the OEX market. And that was just, I believe it was the origin of the NASDAQ 100 or maybe even the S&P 100. But it was an index based off of the market, 100 of the top flyers. And so no one knew what options were at the time. It was a very small market, but it was the only thing I could trade because it was so minimal in price. For $200 or $300, you could, buy a lot of leverage. So I think those were the very first things I traded, and I did tremendously well. I think I did. I probably made enough to live for a year in those days, probably in about 2 or 3 months, and not knowing anything, just going off a feel of what I thought the market was going to do. And just like everybody else, I started out tremendously, and then in the next month, I think I gave it all back, and then some more.
Yeah. Got you
kind of
had some
the
education.
story. Yeah, most people go through, and this brings everyone to a crossroad. You have to make a decision where, okay, I'm not going to do this anymore. It's just I'm like gambling, or else you say, you know what, I'm going to try and learn about this and see if I can make a living off of it. And so that's what I tried to do instead.
So that kind of pulls that open an interesting question, because if it is somebody that's kind of brand new and getting started, what would you say are kind of like one or two of the most important principles to trading successfully long term?
Well, the first thing is getting a good mentor. But someone, to me, I have a totally different idea of what a good mentor is to a lot of people. And by mentor, I mean the people that speak over the Metastock webinars, people that you see online. A good mentor, in my opinion, is someone who doesn't trade for you. In other words, so many mentors say, well, I'll teach you exactly how to do this, and then you come to my chat room and I tell you what to do. You see, to me, that's a crutch. And I know that flies in the face of a lot of what people teach. It's just, this is my own personal opinion, because in my 47 years, the only traders I know that are still trading are the ones that make their own trading decisions. They don't go to chat rooms or trading rooms, and that's not even most of it. They don't even listen to fundamental news the way I don't. I stopped listening to news 4 decades ago. They don't look at outside sources. They just have a simple plan in place and then they execute it. So I would say get a good mentor who can teach you these things, but then you have to go out on your own. So you have to, leave the nest. You can't rely on someone or some indicator or something telling you how to, or what to trade. You have to make those decisions yourself. You have to become a part of the process. That to me is the most important thing.
Do you have somebody that you would consider a mentor of yours, somebody that helped you learn?
Well, I've had a lot of mentors. I mean, I used to follow, so many, Proctor in the old days, but then for a lot of Elliott Wave things, but I couldn't understand it. So I just, once again, fell into the trap of, well, you tell me what the market's going to do, because I don't really understand this, a wave 3, a wave 2 of wave 1, it was just too complicated and too subjective. I also looked at a lot of Gann stuff, which was interesting, but it was just way too complicated for me. It wasn't until actually I started to read a lot of Larry Connor's books. and information. And he really simplified it. And I know you've said in the past how I have simplified my teaching in webinars and to students. I got that from him because he really took it down to a level where it's just step 1, step 2, step 3. You don't have to make it more complicated than it is. And he was the first one, even though I didn't trade a lot of the things that he was promoting and strategies, it was the concepts that I really liked. Things about being in sync with the market, things about, how is the market really overbought, oversold? There's no such thing as overbought, oversold. There was just a lot of concepts like that really stuck with me. And I would say that his information really did. His books that he wrote about concepts of the market and trading really helped me a lot.
Yeah, I like how you kind of say, yeah, it's simple. The things that are simple, then the things that you understand make a good teacher, right? Like for me, it isn't just about being able to understand it. It's being able to kind of rely on it and implement it. If I understand why I'm making a trade and kind of like what the exits are and stuff like that, I find I'm a lot more disciplined about it.
Yeah, that's going back to what I said about you have to be a part of the process, because your strategy, you don't really trade a strategy. You trade who you are. In other words, I'm not the kind of guy I used to be. When I was on the floor, I was making 20 trades every kind of 10 minutes. I was in and out, because that's the nature of trading on the floor. Okay. So that's who I was, and that's the way I traded. I'm not like that anymore. Okay. I'm in 70s now, and I'm like, I can't trade that many times a day. I can't do this. So the way I trade is, I'll take the setups when they come. Maybe I'll get 1 or 2 setups a week, maybe 3 or 4 a day if I have more time to trade. So you have to realize what type of trader you are. That's the very first thing. You have to do a little soul searching and say, listen, does it just look sexy to be a day trader? But in reality, I can't do that. I can't sit and stare at a screen 24/7. And so you have to ask yourself, maybe I'm more of a swing trader, or maybe I'm more of an investor. Remember, I tried to teach an initial student once in the old days when I first started my trading method. And I gave him all the rules and everything. And then when I asked him a week later, after I had a really good week, I said, hey, you must have done really well. And he said, you know what? I couldn't pull the trigger. I was just too nervous because I couldn't trade that many times or take that risk. And so I realized, like, the great truth is you have to trade what makes you feel comfortable, what's an extension of you. And it turned out this trader was more of an investor, a swing trader to an investor. And I said, well, listen, if you go out a different time frame, check out weekly bars, maybe even monthly, and that's where they felt comfortable. And then he started to become consistent. So you have to really understand yourself first, and then start to implement some type of strategy or method that mirrors who you are.
If you could estimate, Steve, how much on a normal trading day, like on an average trading day, do you actually spend trading and looking at markets and stuff like that?
Well, I'm always looking at the markets. I'm looking at different things. I'm getting ideas. I'm testing different ideas and methods. I'm always looking. So it's always there in the back. But I would say actually trading, I would say probably no more than maybe an hour or 2 where I'm actually in the market. Because it's just the way my trading is. I know I'm giving webinars on my site. I'm teaching my students in private sessions. I don't have time to just be in front of the computer. I mean, actually, trading. So I know my time is limited. So it's not as much. But, once again, that mirrors who I am at this point. Like I said, 45 years ago, it was different. I was trading on the floor. So I was in and out like crazy. That's who I was then. But I can't do that now. Yeah.
Yeah. They don't let me do that here either.
Yeah.
Do you usually, Maverick has a question in the chat, and he wants to know, do you scan to find trades, or do you find them other ways?
Well, since my background is in day trading, I don't really scan because I'm only looking at one market. I mainly trade the E-mini futures because it fits with what I was trained with, which was intraday trading. And even though I don't scalp and trade back and forth the way I originally did, I'm looking at intraday charts. And I know we're going to get a lot of questions like, oh, what time frame do you look at? What's the best time? Once again, it's up to you to decide, because I have tons of students that ask me the same question. And I say, listen, what may work for me won't work for you at all, just the same way that example didn't work with that initial student I had. So, we teach our students all the rules to our methods, but then we say, you've got to find the right time frame. You've got to find the right market. And the E-mini markets may be the exact opposite of how you want to trade. But for some other traders like myself, they fit in perfectly. So that's what I like to do. And I don't scan because I'm just starting every day fresh. I start my trading day roughly about 3 in the morning on Pacific Coast time. I look at I see what's going on in the markets overnight. I, just kind of check out what's happening. And then I'll start to look for trades roughly around 4 a.m. my time.
Would you say that 100% of your trades are E-mini futures, or do you sometimes dabble in stocks if you really like them?
I'll dabble in stocks if I really like them. If I see something that just looks too inviting, yes, I will. But I would say 90% of the time, it's
okay.
In that.
Yeah. Do you do anything else like options, ETFs, coins,
no,
forex? Nothing else. Okay.
I stopped doing options then when I gave it all back.
Okay.
And also it was options when I first started trading options in the 70s were so easy to trade because the premiums were low. And basically, it was almost like trading a future. It was just 1 for 1. The parity was just perfectly in line. But then they got all the option traders involved. They started to become just like everything else. When more and more people get involved in all these different concepts going up back and forth and people in and out, then it got too difficult to trade. The premiums were too high to make any money. And I said, you know what? Trading options is difficult because you have to bet on two things. You not only have to bet on what the stock or the future, what you're looking at is going to go in a certain direction, a certain time frame, but I mean, in a certain time frame at a certain amount of time. So there's two things you have to decide. That was just too difficult for me. So I just focused on the actual thing, like betting on the actual horse.
Great. Raj wants to know if you have suggestions on good books to learn. I know you do a lot of video courses and stuff like that at specialisttrading.com. I'm going to go ahead and type that out. Okay. But do you have any suggestions on books? Do you have a book? Any books that you've written?
Yeah, well, first of all, the books I would recommend, since I said they came really simple for me. I've read tons of books, and I tell you, they were so complicated. They were good. They're probably worth and full of tremendous information. I just couldn't understand it. So I wouldn't recommend those things only because I don't really know much to say. The only ones I would were Larry Connor's books. I can't mention any offhand. I can't remember them because it's been so long, but anything by Larry Connor's, because it's very simple and the concepts are very easy to grasp. Probably the best book I would recommend is the one that I wrote, The Secrets of a Stock Exchange Specialist, because that really I go into real detail about how it was like to actually trade on the floor during the crash of '87 and how crazy it was. And then I give a few ideas and concepts about methods, but it really is a good book. It's for beginners, and it's a quick read. You can read it probably in a day. It's more of a pamphlet than a book, but it's called. You can contact specialisttrading.com also for information on that as well. It's called Secrets of a Stock Exchange Specialist.
I had to look that up. I haven't read that one.
I'll give you a free one, Jeff.
Okay, but only if it's signed.
Okay, I'll sign it.
I do, let's see, in terms of books that come to mind that I've liked, Maverick had said Candlestick Profits by Steve Bigelow is a good one. I really enjoyed Dr. Elder's Come Into My Trading Room. You could look into that one.
Oh, I've read books by Dr. Elder before, too. I can't think of the name, but yeah. In fact, I went even to go see him while I was trading on the floor. I went to see him in a webinar. So, yeah, I would recommend his work as well.
Let's see. Okay. Let's see. Let's find a different line of questioning, so to speak. I know you've had a few strategies that you've kind of developed. How many trading strategies do you actually have right now? I know that we've got there's at least 4 of them.
We actually have,
how many? Go ahead.
We actually have a total of 10. There are 10 strategies on our website and a lot of students say, well, why do you have so many strategies? I mean, why are you just marketing the same thing over and over again? No, because everyone trades differently, and we're trying to provide you things that, once again, meet your needs. And once you can fully understand this process, then you can trade something that is in tune with what you like to trade, or how you like to trade, I should say. And then that's it. You don't need to come back for signals and stuff. You'll know how to do it. You can. Our students always have access to contact me via email. So they're always free to contact me, but there's no reason once you learn it. I mean, we're not, our philosophy is it's up to you to decide. You're in charge of your trading, not us. So we have a total of 10, but we also have techniques and indicators that really can also be applied as trading mechanisms as well. So we have, I'd say dozens of different ways to trade.
Maverick says he likes your buy-sell line. Only go long if it's above the 50 and only go short if it's below the 50.
Yeah, that was one of the first things my mentors taught me. And I thought it was so simple, it possibly couldn't work at all. It was just too simple. And it's, this is not something that you have to purchase. This is something that you already have access to right now. So that just shows us in good faith, we're really trying to teach you and take your trading to the next level. Everyone has access, regardless of what platform you're using, to plot a 50-period moving average. That's what we call our buy-sell line. So if you're looking at a 5-minute chart of the E-minis, or if you're looking at a monthly chart of NVIDIA, you should have a 50-period moving average plotted on that. And the basic concept is, this is probably worth its weight in gold. You're only going to take signals from any strategy. I don't care if it's one of mine, one of yours, it doesn't matter. But any strategy, if price is above the 50, you'll only take buy signals. That's it. And if price is below, you'll only take sell signals. It's that simple. But once I learned that concept, my trading turned around tremendously. And I didn't even believe it at first. I thought that's ridiculous. It's too simple. But it's trading is about consistency. It's not about hitting home runs. So what we want to do is, raise your level of consistency. And if you apply this, sure, there will be times when you have some great buys that are below the 50, some great sell shorts above the 50. But over time, I always say it's like the slot machines. Sure, every once in a while, they'll give you a great jackpot where you think, oh my goodness, this is it. But if you stay there long enough, you're going to give it all back the same way I gave it back with the options. It's the same way if you buy below the 50 and you sell above the 50. If you trade that way over time, you'll most likely give it all back. Take it from someone who was there. I did it. And for the first couple of years of my trading career, I suffered because I traded that way. It wasn't until I learned that simple rule of only taking buy signals above and sell signals below that my trading all of a sudden had a slight edge. And that's what led to consistency. Now, sure, you need some other things. You still need structure. This is not a strategy. It's not something that you say, okay, the minute it's above, I just buy at the market, right? No, you need some structure in the form of a strategy or a technique. But this is the beginning of that, where you start to become a consistent trader. And go back, like I always say, go back and look at your last 10 or 20 trades. I can almost guarantee that's why you had losing trades, because you were doing the opposite of the buy-sell line.
Okay, let's see. Would you say that 100% of your decision making is done on indicators, Steve, or do you look at other things as well?
Oh no, no. We use indicators, but mostly it's pattern. There's pattern recognition as well. There's a lot of pattern. Strategy number 4, which is a great strategy, the one that I still trade to this day, that my mentors taught me. That is a pattern recognition method. It only uses one indicator, and you already know what that is, the 50-period moving average. So it's not indicator based at all. But in that particular method, we look for a pattern that repeats itself over and over again in any market or time frame. And that's a perfect pattern recognition strategy. Well, sure, we do have some methods that are pattern and indicator, or just indicator based. But trust me, they're extremely simple. It's not like we have these 10 indicators, waiting to cross over and going here and there. No, it's usually maybe 1, 2 indicators at the most. And that's about it.
Do you employ different strategies if you feel like the market is bullish or bearish, or is it fairly consistent across different market environments?
Well, see, the 50-period moving average automatically decides that for you. So, that's all I have to do is look at that. So it's a funny thing. If you look at my Twitter page, we had one of our strategies generate buys in the spiders. I believe it was on Halloween. Now, this was in the market, had a big sell-off, and it generated a buy signal. So someone would say, well, how could you, on that day, they would have said, how would you have known who was going to win the election? How would you have generated? We had a terrible closing day. Say, listen, the pattern just fell into place and we're above the 50-period moving average. So that's all I need to know. I'm not really concerned about who wins the election. I'm not concerned about, if it was a terrible down day. It's just, if the pattern meets the requirements, I can decide to take the trade or not.
Do you ever look at seasonality or seasonal patterns? Anything like that?
No, I really don't, because once again, and this is just coming from me, my own personal observation in nearly 5 decades. And so if you want to do these things, by all means, go ahead. But I have found no consistency in that. I found no consistency in looking at fundamental news. I found no consistency in looking at 2 different time frames. To me, once again, keep it as simple as possible. I look at one chart. That's all I look at. I plot the 50, and then I look for a strategy requirement to be met. That's it. I mean, it doesn't have to be more complicated. And that's what sustained me going on close to 50 years now.
Here's a question in the chat. We work, this is from Raj. We work so much on improving the trading skills, but why do the best traders have negative ROI? Does that mean long-term investing works better than trading in terms of protection of capital?
Well, I don't know anything how traders have negative ROI. I don't know.
I wouldn't say that's a good trader.
Yeah, I've never looked at those statistics, so I have no idea. I mean, I can't comment on that because I have no idea. It's like saying, well, why does it never rain in a certain part of the world? I don't know. I have no data to prove that's right or wrong. So I really can't answer that question. All I know is that, listen, this question is coming from, once again, what we try to instill in our traders, an outside source, as if, why does this happen to them? Remember, we focus on things that really don't matter. I really don't care if a trader is doing well or not doing well. I mean, I'm happy for them if they do well, but that's not my concern. My only concern, we waste time trying to figure out about other traders when we should be using that same amount of energy and time figuring it out ourselves. So, if traders have negative ROI or positive, if they focus on this, I don't really care. It makes no difference to me. What makes difference to me is that I understand the process, that I'm in sync with the market I'm trading, and that's it. And if I can help anyone increase their odds for consistency, I'll do that. But I really don't look at that. The reason why, it's funny, when I was on the floor, there were a number of traders who were specialists when I became a specialist, who used to get really competitive with other specialists, say, oh, that guy made 150 grand this month. How come he does so well? I'm going to try and beat him. Or another one would say, well, gosh, he's a terrible trader. He lost 50 grand this month. And I would sit there and go, well, who cares? I mean, we're not competing against them. We trade different stocks. It's not like we trade the same stocks and he did better in one than I did in the other. So all I'm concerned about is how well I do. And if I can help someone, that's great. But why would I care how someone else does or doesn't do? I can teach someone to help them. But once they're on their own, they're responsible for their results.
Do you feel like psychology is important in trading, like managing fear and greed?
Well, I think, as you can tell from that last answer, yeah, I'd say psychology to me is about 3/4 of trading. It's really so important. And once again, it goes on to, really focusing on who you are. I know it doesn't make sense to a lot of people because I was there when my mentors tried to teach me these concepts. I said, that's ridiculous. This doesn't make sense. But then I realized that, yeah, they were right. How psychology, here's a perfect example. It's a funny joke. I read this somewhere, or may have read it in a book, or someone said it in a seminar I went to, but they said there was this, trader, or actually just this person who was having a midlife crisis, this gentleman. So he decided to drop everything, leave his family, quit his job, denounce everything. He went to India wanted to find the meaning of life. And so he goes there and he's searching for some special guru, some guy who's supposed to know the answers to everything. And he's, this way he'll find it. And so he searches for decades and, he doesn't have anything. He's living like a hermit. Finally, he goes up to this mountaintop and he looks in a cave, and there sitting outside the cave is this old man with a big long beard. And that's the guru he's been searching for, and he's meditating. And he goes, oh, guru, I've been spending the better part of my life looking for you. Can you teach me the secret, the meaning of life and the secret to life and to knowing who I am and why I'm here? What's my purpose? And the guru says, well, my son, you have 2 different ways. You can do like I do and denounce everything and eat maybe half a bowl of rice, eat every day and spend the rest of the day just meditating. Or you can do the second, which is much harder. And he goes, what's that? He goes, well, you can day trade the E-mini futures for a living. And it's really true, because once you start to trade, you're going to find out who you are. You're going to find out how frightened you get. You're going to find out how cocky you get, how arrogant you can get. You're going to find out just what type of a person you are. Put a little power in your hands and you'll find out who you really are. And so if that's that important, I think you should start out your trading trying to understand, like, why am I trading? Am I doing it just to show off to everyone so I can talk about at parties? Why am I trading? Am I really trying to get some second income because I feel I can do it? You have to understand why you're doing this first, and then go to the second phase, which is, well, okay, so then what type of a trader will I be? Will I, want to trade 100 times a day? Will I want to trade once a month? What are my risk parameters? Will I be able to sleep at night if I take this loss? Will not be able to sleep? You have to ask yourself all these questions before you even pull the trigger for the first time.
Do you have any specific advice you'd give to traders who struggle with discipline and emotional control?
Yeah, wow, that's a great question. Yeah, I would say, the best thing is probably to paper trade. I know this is like the last thing you want to do, because most people who don't have discipline have more of what we call a gambling mentality. When they don't have that discipline, they're looking for action. And that's what a gambler wants. A gambler says, like, hey, who do you like in the fifth? What horse do you like? And that's the same way traders can have that gambling type of mentality of like, oh, I'm going to turn on the TV. Who does this guy tout? Or I go to that chat room. Who do they like? What should I do? But what you're really saying is to the markets is, I don't know what to do. I don't have enough experience. I don't have enough knowledge. I don't have enough discipline. So I'll let someone else decide for me. And you should never come into trading that way. So what I would say is, listen, paper trade. Every other, endeavor, every other line of work has some type of rehearsal period. Actors, they rehearse before a movie or a play. Athletes have practice games or practice before they play. But for some reason, traders think, oh, I'm just going to jump in and start trading. No, you have to practice. And the way we do it is by paper trading. I've paper traded for 6 months at a time, a method just to find out and see if it really is valid. So there's nothing wrong with practicing, and this will develop discipline, and you'll see how something is working, and then you'll be able to understand the process and get in sync with that.
I love that answer. I also like the idea of, okay, I started to feel comfortable with this method. Maybe it says 6 months, like you recommended.
Yeah.
It's always okay to go small. You
Oh,
don't
yeah.
have to buy a bunch. You could just, and I think as you kind of do that, you'll get more confidence, because you're taking, I always feel like there's a little bit of a difference if you have some money on the line versus a paper trade. And so scale in is, I guess, kind of what I would add to that.
No, totally true. In fact, that is something to all of our methods, all of our students around the world. We tell them, first, it is required that you paper trade, whatever strategy or course you've taken of mine. And second, once you feel comfortable that you know the process, start off small. Do not start off there, oh, I'm going to bet the farm now. Start off small and scale, like you said. Yeah, that's extremely important.
We have a rule that we made up. You can only bet the farm if you have more than one.
More than one farm?
Yeah.
That's good to know. That's good to know.
Do you have a particular trade that is very memorable for you?
Well, yeah, it was memorable. It was memorable because it really turned my way of trading around. It's kind of a horror story. The memorable ones are the ones that where you lose, in my opinion, because those are ones that I seem to remember. I don't remember the really great ones. I don't, because those are really kind of lucky, where you go long a position and then something happens, you walk away to go make a sandwich, you come back and it's up 20 points or down 20. It's like, wow, this is a great trade. But I was on the right side and I initiated it, but I had no idea it was going to do this. So I don't really remember those, but I remember the terrible. I have a couple of terrible ones, but I would say my experience on the floor during the crash, that was it started out being a great trade, and then it turned out into a terrible trade by the end of the day. If you want to hear it, I don't know. It's a long story, but
it's up to you.
I'll try and go through it really quickly. The crash happened October '87. A couple of weeks before the crash, I was out of the country for my brother's wedding. I was in Europe. So a lot of people don't know that prior to the crash, the market had been steadily going down for a couple of weeks. And in those days, it was already below the 50-period moving average. So it was just getting killed. Now, I came back the weekend prior to Black Monday. So I talked to a lot of my friends. I said, wow, this market's been acting terrible. And they said, oh, it is terrible. And I said, well, I'm going to buy everything because I think it's too oversold. And they said, no, this is totally different. You don't want to get involved in this. I said, no, I'm going to fight it. So Monday morning, walk in, and there's just tons of orders already at 4 a.m. strewn on the floor. People wanting to get out. Everyone's panicking. To make a long story short, the market went down about 200 points, which was, I think, akin to maybe about a couple thousand points in those days. And I decided to buy everything, and everyone was selling it. And I remember my clerk saying, "Are you crazy? You want to hold on to our positions?" I said, "Yes, let's hold on. I think the market's going to bounce." And the market did bounce. A lot of people don't remember, but they thought 87 was a straight down day, but it bounced up a little bit. And then on the bounce, I sold everything, and I asked my clerk how well we had done, and she tried to figure everything out, and it was just going nuts. I mean, people yelling and screaming, and she goes, "Okay, this is not a round number, but to the best of my ability, it's somewhere between, we're up 200 and 250,000." I said, "Oh my God, this is unbelievable. We're having the best day of our life here." So the market all of a sudden started to head down lower and lower and lower. And so then roughly about an hour or so before the close, I said, "Okay, we're going to buy everything again. We're not going to just sell it to somebody. We're going to buy." And she said, "Are you sure?" I said, "Yeah, we're going to make tons of money." So I bought everything again, and it continued to go lower and lower and lower. To make a long story short, I lost that 250,000 we had already originally had, and I lost about another 500,000. So by the end of the day, I had a tremendous loss. I'd given back everything I'd made in the first trade and lost it all back as the market closed near its lows. I think comparable to today would be similar to the market being down about 5,000 or 6,000 points in one day. So I lost everything. And this was nothing compared to the other traders on the floor. Some of them lost millions of dollars just on the day, where I had lost maybe at the most $500,000 or $250,000. I can't remember. So it was a terrible trade, but it taught me, once again, never to go against the 50-period moving average and to go against the trend, really. The trend was down, and I lucked out, just like I said. I lucked out on that first one. But if you do that often enough, you're going to give it all back and then some. So that's what really turned my trading around.
For sure. It seems like that those are the ones that those are the lessons. Those are the ones that teach you and kind of make you a little bit better the next time around.
Right.
Do you have any thoughts or feelings on current market trends? Or do you feel like we're going to stay bullish through the end of the year? Do you have anything to say about that?
Once again, I have no idea. Our philosophy is we just follow whatever the market wants to do. Now, currently, if you go and look at a daily chart, let's say of the spiders or the S&P 500, we're above the 50 period. So the market is telling me, not some guy on TV or someone in a trading room, the market's telling me I want to go higher. So I'm going to just be in sync with it. I'm not going to go against it. I'm going to be in sync with it. Yeah, there you see the chart right there. If you look back on the 31st, I believe, that down day, we closed just a little above the 50 period, and that was a buy signal right there. Yeah, and that was one of our buy signals. You see what the market did. So this is what we mean by being in sync with the market. Now, is that guaranteed that every trade is going to work out 100%? No, but we're just trying to give ourselves an edge, and you'll have a much better edge if you're in sync with the market as opposed to trying to fight it the way I did on the crash of 87. So I personally have no idea. It could keep going up for the rest of the year. It could go down starting tomorrow. I don't know. And I really don't care. If it's above the 50, I'll only execute long trades. If it's below the 50, I'll only execute short trades. I'm just doing whatever the market we teach is like a river. What you want to do is just, you don't want to swim upstream. You just want to swim with the current at your back. And that's all you have to do. You really don't need to care what direction it goes. I really don't care what direction it goes.
What do you do to blow off steam? What do you do when you're not trading, Steve?
To blow off steam, the first thing I do is probably take a nap. No, I'm kidding.
I could use a nap right now.
No, I love to play sports, basketball. I love to work out. I spend time with my wife. I love movies. I love music. So those are the way I have family. I live in Los Angeles. I spend a lot of time with my family because we're all here in Los Angeles, and that's really what I do. It's very simple. I keep things. Once again, my trading is a direct reflection of who I am. I'm a basically simple person. I don't overcomplicate my life. I don't even have a cell phone. That's how uncomplicated my life is. So I keep it simple, and my life is simple.
Do you? So you say you work out. Do you work out? Do you get up and work out in the morning, or do you work out at night?
I used to do that. I would get up and I'd go to the gym at 4 o'clock. I'd go there around 4 and come home around 5. Unfortunately, my gym now doesn't open up till about 5:30 or 6, and that's too late for me. So I will work out after the close, or I will play basketball after the close,
Okay.
and
Do
do
you
that.
feel
But
like do you feel
go
like
ahead.
kind of having those hobbies help with kind of maintaining discipline and maintaining a trading discipline?
Yeah, in my opinion, it helps tremendously. I think one of the real setbacks that most traders do is they make it their entire life. I mean, that's all they talk about. That's all they do. It's just entirely in front of the screen. And one of the most, once again, I know from firsthand experience, when I was on the floor, it was my entire life. I was a young man in my 20s and early 30s. And that's all I did. I ate, slept, drank the market. And so when, I was always looking at charts, coming up with new ideas, looking at concepts. And so I used to be depressed when the weekend happened because I couldn't wait for Monday to come. And now it's like, I want a life, and the market shouldn't take over. I don't even talk about the markets when the market's closed. It's just, that's what I do for roughly 10 hours a day. And then I talk about other things. I really rarely even discuss the market afterwards.
All right, you mentioned something called Twitter, but I think you meant to say X.
Oh,
What do you want me to put your X handle on here? What's the best way people
yeah,
can kind of find out more
sure.
information from you?
It's at SPC SPLST. Oh no, I'm sorry. I'm trying to remember what is it. If you'll bear with me, at
You're fine.
yeah, I'm trying to, because I just automatically sign on, and then I'm thinking like, wait a minute, what is it again? I can't
Yeah,
remember.
sure, sure.
In fact, actually, I can look at it right here. Let me see. It is. I'm opening up a browser at SPCLSTTRADG. That's abbreviation for specialist trading. At SPCLSTTRADG.
Okay.
Sorry about that. There's too many T's and too many L's and S's in there. It's difficult.
I'm going to read it back to you just to make sure.
Okay.
At SPCLSTTRADG.
Great, you got it. 2 T's. That's what most people forget, the 2 T's, but yes, that's
All
correct.
right, cool. And then also www.specialisttrading.com.
Correct.
All right, cool.
Yeah.
And then that's really kind of what I had for you. Any final thoughts?
No, my final thought is, as I said earlier, I have nothing against if you want to look at news. I have nothing against if you want to go to a trading room. That's fine. It's just been my experience that, ultimately you should take those things and then go on your own. As I said, I've been trading for nearly 50 years, and the only traders I know that are still around, that haven't just had a good year, maybe a couple of good years, but are still around after 4 or 5 decades, are the ones that don't listen to outside sources. They have a plan that they've formulated through this education, and then they just execute it themselves. And it's very simple, probably something you can write on the back of a cocktail napkin. It's that simple, and then you just implement it. And that's what trading should be, as simple as possible, and something that is in sync with whatever market you're trading, as opposed to trying to buck the trend and swim upstream. You just use those simple, edges, like the 50-period moving average. You're already automatically, giving yourself a really nice a chance for winning.
All right, cool. Well, Steve, I want to say thank you for joining us today, but also thank you for, all of the years we
Yeah,
spent
well,
together,
so
all of the
hope
fun
there's
we've
some
had.
more. Okay.
Yeah, to many more.
All right. Thank you so much, Jeff. Thanks everyone for listening.
All right. Thank you, Steve. Again, if you're watching us on YouTube, hit like, subscribe. It helps a great deal. We really appreciate it. And go to www.thetradersforum.com. Sign up for free. We'd love to see you there. Thanks again, Steve. Thank you, everybody, for watching. And we'll see you again soon.